This podcast is sponsored by the Building Performance Workshop, where I create tons of home performance resources to help pros make more money doing better work for happier clients. More at buildingperformanceworkshop.com. Enjoy. Welcome to the Building Performance Podcast from Green Dream Group in Chicago. I'm Corbett Lunsford, and today we're talking about trends in high-performance building and retrofits from the mortgage angle with Kerry Langley, who is a market sales leader at Synovus in Georgia. Kerry, thank you so much for being on the show.
My pleasure. Looking forward to it.
I like what people write about themselves, and the beginning of your bio says, "I provide hope for America." Can you tell us what you mean by that?
Yeah, what I mean is I've been lending money. I've been in the residential lending business for 30 years, and I have always been fortunate enough to give people solutions. I have the part of my brain that I use at work all day long is very analytical, but I'm also what is called an expressive. So I get to communicate to people numbers, solutions in most cases, to the challenges they may find in the marketplace when it comes to financing residential properties, and have had a lot of fun doing it for 30 years.
So the biggest challenge that most people had that harkens back to why we're in the mess right now that we're in is that people just don't have enough money to get the places that they want. Is that the problem you're talking about?
No, I wouldn't say that. No, I would tell you that most people don't understand the variety of solutions available in the marketplace. So I would tell you that it is the industry, and I'll throw my entire industry under the bus. I'll tell you the mortgage lending industry, the real estate industry. I'll throw your business under the bus, the energy auditing and that part of the business as well. The communication that we give to the consumer, the person who's going to buy a house or who owns a house and wants to improve their house, doesn't have the right information. And so I would tell you the challenges are getting the right information to the people so they can make the right choices.
Bingo. And who are the right people?
The right people are when I talk about from the industry side, I would tell you there are people who are enlightened, who have a true passion to give the consumer, the homeowner, the home buyer, true choices and give them the education they need to make the right choices today. And obviously the right people to give that to is going to be, this new buyer, this new homeowner who is thinking more about the house as from a total cost of ownership type of perspective, which is what we preach, instead of a how big of a house can I qualify type of thing like we saw, decades past.
What about the mortgage lender? I mean, ultimately, it seems like that's the person who makes the decision on how much they're willing to lend, what the rate is, et cetera, et cetera. Does high-performance construction even exist for those people?
Sure it does. It does. Well, let me back up just a second. It exists for those people in a very small amount. The reason being is our industry, the mortgage lending business, is very, very controlled today by government and regulations. And so a lot of people in my industry have allowed that to encompass their entire day. All they think about is regulations. All they think about is rules. And they have, unfortunately, this has squelched a great deal of what I will call entrepreneurial spirit or entrepreneurial opportunities. And so innovation has not been the rule of the day. It's been more of how do we protect ourselves from being chastised by a government regulator and what have you. I've been fortunate enough where I've worked in environments where I've either been successful enough or I've talked about it enough to the point where people have let me spend my time on innovation, and that's what we do.
Is innovation a normal part of the financial industry?
I would tell you it has always been a normal part of it. I would tell you it is not a part of the residential lending business as a rule today.
Can you extrapolate on kind of why that is?
Yeah, because today we have, every time you turn around, there's a new group of regulations coming out of the folks in Washington. We have a new best friend, which is called the Consumer Finance Protection Bureau, focused on controlling how we interact with our consumer. I'm all about adequate disclosure. I'm all about being fair to consumers. I'm all about not taking advantage, from a lender perspective of a prospective home buyer or homeowner. You're not going to find a stronger advocate than me when it comes to those things. But at the same time, the regulation that we deal with, the regulatory environment that we deal with, it is very, very tight. And so leadership folks spend lots and lots of time on making sure we don't get in trouble and there's only so many hours in the day, and if you're spending your time on that, then you're going to spend less time on innovation. We could have a 3-hour conversation about what it's all into, but at the end of the day, the government and the U.S. taxpayers spend a great deal of money bailing out the mortgage banking industry and the residential real estate business, and we're an easy target. And I'm not saying that there's no reason for it, because there is. I mean, there were a number of things need to be changed, and they are being changed. But as with most things when it comes to government interaction to fix something, I believe the pendulum has probably swung a little bit too far, and so it's gotten in the way. As I said earlier, it's gotten in the way of what I think is very needed innovation.
And are you able, as somebody who's trying to innovate, to work around the regulations? Is it the fact that people are trying to comply with the regulations, which I guess in the building terms would be like trying to meet code without then shooting further than code? Is it possible to innovate the way you're talking about with the way the regulations are set up?
It is possible to innovate, yes, if you spend your time, if you're focused on it like I am. I'm passionate about it. I wouldn't say work around the regulations, and I know you didn't mean that in a negative way. I wouldn't say work around them. I would say evaluate, analyze, and find opportunities in the regulations that we have to deal with.
Mm-hmm. How does your approach incorporate kind of high-performance building techniques that would make a home more durable and energy efficient and comfortable, et cetera?
Well, what we basically do is we do a couple of things. First of all, we have analyzed the loan products in the marketplace and have identified the capacities or the capabilities of the loan products that exist to fund specifically energy retrofits, energy improvements, and we've taken that to the marketplace. And we've told the consumer, hey, not only are you going to have funding to upgrade your house with granite or stainless steel or hardwood floors, but we're also going to put in the mix energy improvements, energy retrofit improvements, you name it, the whole gambit of things that your audience would normally think about when it comes to a high performance home. The second thing that we do is we also use a piece of software that I wrote that's called High Performance Lending that basically takes the whole monetization side of why should we own a high-performance home and puts it in front of the consumer as an integral part of the financial decisions they're making. So if we're looking at a transaction, for instance, where somebody's going to buy a new construction home, and let's say it was going to be $250,000 and it was going to cost $1,500 a month. Well, the software allows the consumer to look at that and say, okay, should I upgrade this house to include the next level up in energy improvements or energy upgrades? If that's going to add $5,000 or $10,000 to the price of my house, what is that going to do to my total cost of ownership? What's that going to do to my monthly debt load? How's that going to impact my budget? And so what the software does is it looks at the energy savings component, it looks at the mortgage component, it puts them all together, and hopefully in a presentation that the consumer can understand, and we'll start that discussion so they can make the right decision.
Does your total cost of ownership include gas to and from their job?
I'm on the third version of my software, and I'm about to finish the fourth version. And the only thing that I haven't done automated wise is go pull Google Maps kind of data where you actually do an actual, hey, it's 38.6 miles to and from on the commuting side.
Yeah.
But it is going to answer your question. The software includes that where it would be a data input from the consumer or from whoever's working the software numbers. But ultimately, it will be an app where somebody can, click on, here's my office address or my work address, and here's the location of the house, and let's figure it out. The only thing they would need to put in would be a miles per gallon kind of estimate. Yes, but to answer your question, the commuting expense, to me, house A versus house B needs to be part of the analytics. Yes, sir.
So when you're building these reports with the energy upgrade stuff, you obviously are going to need to have at your right hand somebody who can do that kind of analysis. Typically, that's a HERS rater or somebody who's an energy analyst. Do you have a stable of people like that?
When I wrote the software, I built it around using a HERS rating. And because, once again, I'm not a building scientist. I understand it. I've been through a lot of training, and so I understand the mindset behind it, but I would never say that I have the skill set of a building scientist or a HERS rater. I depend on those professionals to do that for me. So the first thing I do when I sit down and look at these numbers is we look at HERS ratings. We make some estimations on some things, and of course we disclose to the folks that this is based on estimations, but we also have some relationships with folks where they guarantee in writing and put warranties behind, here's what your energy costs are going to be, or here's what your kilowatt per hour's usage is going to be. And so we include that as well. So to answer your question, yes, we have a building scientist, energy auditor, whatever this person's hat may say or name tag may say, we have somebody beside us who is an expert.
In the interest of improving and learning from mistakes, why don't you go ahead and throw my industry under the bus and tell us exactly what we would be doing wrong in talking to somebody who is in your position in our local markets that we're trying to get to convince them to do high-performance lending. What are we doing wrong that is clearly not helping the case?
Okay, and that's a real simple one because I've thought about it a great deal. At the EBA conference, I guess it was last year, CR Hero of Meritage Homes used a term that I will steal because it was so appropriate in my mind. The problem with the energy raters, this was the ResNet conference, I apologize. The problem with energy raters is they're the smartest people in the room. And they may very well be the smartest people in the room when it comes to building science. But at times, somebody who knows nothing about a particular subject matter doesn't need to be talked to like they're ignorant. And I think that energy auditors are smart, and sometimes they talk like they're smart. And some people don't really understand it. And as a matter of fact, that's been one of the challenges that we've had in our business is once we learned about the energy side of the house of retrofitting or upgrading or what have you, the high performance building whole concept, it has taken us 5 years to get it to the point where we've made the message simple enough so that a consumer will not be scared away by it. And believe me, we've had a lot of different iterations of it. And so I would think that would be my single comment when it came to the energy auditing audience is keep it simple, stupid, because the people don't understand what you're talking about.
Mm-hmm. So if I were to try to bring, now, first of all, I'm based in Chicago, which is one of the most supposedly sophisticated places in one of the richest countries in the world. And these EEMs, the energy efficient mortgages or energy improvement mortgages, are hardly ever done. Hardly anybody knows how to do them up here. So I'm imagining that a lot of listeners on this show are going to think, well, yeah, that's great, but how can I do that? You mentioned that you're actually using mortgage products that are on the market already. You have not invented a new product. Is that right?
That is accurate.
So how exactly how can you roll that out in different places?
Well, the way you can use it, like I said, and this is the part that 100 years ago, earlier in my career, we invent a lot of mortgage products. I've had lots of success where we could. The regulatory environment today does not let us do that. And so basically what we do is we look at the cost-benefit side of why should I or why shouldn't I do energy improvements along with anything else that I'm going to do to a property. And then we apply the existing mortgage products in the marketplace today and say, let's go use this. Let's fund this particular challenge with product A or product B. And we just, it's kind of like a puzzle. We say, how do we fit this into this and make it work? And so it's just a little bit of a different mindset. But the EEM is a great product to be utilized on existing homes as well as new construction. Many people throw it away when it comes to new construction. They just need to look at the guidelines a little bit differently. But to answer your question, I would say they need to partner with a lender who gets it, or they need to call me and I'll tell them how to do it. Because there's some great opportunities that your HERS rater audience or your building science audience, they can use to grow their business today, not tomorrow.
With all the problems with Freddie Mac and Fannie Mae over the last couple of years, I think a lot of people have just been scared away from trying to even look into this stuff because we have no idea whether it's going to exist tomorrow. Do you mind sharing a couple of specific products that you do deal with a lot that have proven to be successful? Well,
we use the EEM, and the interesting thing, and I'll give you an example on the EEM. The EEM in a new construction environment, as crazy as it sounds, and don't laugh when I tell you this, the EEM, the FHA product, is based off of improvements over and above the 2000 Energy Code. In Atlanta, where I live, the building code that is being enforced in the metro area here. There's a 28 county area in the metro area of Atlanta. The building code is based off of the 2009 energy code. Now realize that the EEM nationally is based on the 2000 code.
So what happens is if you build to code, you actually are winning?
You're winning. You're not only winning, but here's the part. You've heard, and I'm sure your audience has heard, that there is a challenge with getting energy upgraded homes or high performance homes or third party certified homes or whatever the buzzword is that you're using for that home, to getting the homes to appraise for the total price of the house, including the energy upgrades, because the appraisers can't find the comps. Well, here's a very simple solution. The FHA, for FHA markets, the FHA energy efficient mortgage allows us to have about 5% of the value of the property financed without the appraisal supporting it, if that 5% is supported by energy improvements over the 2000 code. Well, it's a little bit technical, but most people who are building a $200,000 or $300,000 or $400,000 house would tell you that let's say that we're talking about a market where the HERS rating on this house is a 70 and the market, code built houses are a 90 or 100. Well, most HERS raters can look at me and kind of laugh and go, of course it's more than 5% or more than $10,000 or whatever the number is. Then literally, if the contract is structured properly, you can write that contract where the house does not have to appraise for the total number. It can appraise for the number, not including the energy improvements. That's a solution that we used with a builder in Charleston, South Carolina, 2009 and 2010. Sold about 180 houses and basically eliminated the appraisal challenge when he was one of the only builders in the marketplace that was building a true certified energy efficient home. That one is just one solution. Like I said, there's a whole lot of other ones that we use on the retrofit side. The energy efficient mortgage is one of them. The renovation mortgage products that exist on the FHA platform and the conventional platform are some others. But as I tell lots of folks, it's all about plugging the right solution into whatever the specific challenge is.
That is fascinating. So what you're describing, though, the way that you say it makes me think, and I am not a financial expert, I'm thinking, well, I get to lend more money to someone and have proof that they will be able to pay it back because they're going to have a net positive cash flow. Why would I not? Why is everyone and their mother not doing this in mortgages?
I have no idea. And like I said, I think that when we started talking earlier, because the people in our industry are a little more consumed with regulatory stuff, I think that's it. I have no other excuse. I guess you could point to one of two things. You could say ignorance, or I wouldn't want to say laziness because that has a negative tone, but you could put that with some people. But the other side of it is they're consumed with taking care of business, which is the regulatory side of it. So like I said, whether somebody is a big proponent of big government or somebody who's not a big proponent, it doesn't really matter. The point of the matter is if you're investing time in worrying about regulatory stuff versus innovation, of course you're not going to innovate. So I would tell you, why doesn't everybody do it? I don't really know. That's probably the passion that I have. I'm 54 years old. I'm probably going to do this for another 15 years. And the remaining 15 years of my career, I'm going to focus on making sure that people understand the opportunities.
Mm. So as far as an opportunity, if I were in, let's say, a little town in the middle of the country, where can I find the people that need to know about this at the mortgage lending level? Do I walk into their office and say, hey, I have a really great opportunity for you? Do I go to a Chamber of Commerce meeting, or where exactly?
Well, it's interesting that you say that, because I've had other people ask me the exact same question. And probably what we're going to end up doing, Synovus, the company that I work for, works in 7 states in the Southeast. Kind of, if you looked at the map, you just kind of drew a line around the Carolinas, Tennessee, and went down Mississippi down to the Gulf Coast. In the markets outside of that footprint, I have lots of conversations with people like you're in Chicago, people in the middle of the country. And probably what we're going to end up doing is finding a way to work, for the lack of a better term, on a consulting basis with people and say, hey, let's use the software that we've developed that helps us with this, and let's help you find the lenders to do it. Like I said, the simplest way is you walk into a lender's office, obviously, and say, hey, I'm trying to do this. But like I said, when I came to work with Synovus, Synovus closes well over $1 billion in mortgage loans every year. They'd heard of an energy efficient mortgage. They'd never done one before. They didn't know what to do with it. So it's not just what you would stereotypically think. The small lenders who don't have access to it, some of the big lenders don't. If they don't have access to it, they don't know how to use it.
What are you excited about in the industry in general over the next 5-10 years?
What I'm excited about is the fact that the new construction industry is coming back in the Southeast anyway. I would assume it is in some different markets as well. I'm excited about that, and the reason being is I have found just this year some of the builders are very open-minded to having a conversation like what you and I are having right this minute. They understand when I talk, because when I'm talking the lending business, I talk about the total cost of ownership. That's my story all day long, and they get it. They understand this point, and so we're having the opportunities to have lots of very productive conversations with builders about helping them market their homes, not from a price-sensitive point, but from a value-sensitive point. And so if we can help them show the consumer how they can get more value by buying a home that is a better built house, then I feel like we've done something. And I also believe that as we gain inroads and build more business on the new construction side, it's gonna spill over into the retrofit side. And I think the retrofit is probably the biggest opportunity that we're ever going to see. So we're focused on the easier part, which I think is the new construction, because there's the opportunity there, but we're surely not losing sight of the retrofit opportunity.
Excellent. Kerry, thank you so much for being on the show.
Not a problem.
Kerry Langley is a market sales leader at Synovus Mortgages. You've been listening to the Building Performance Podcast from Green Dream Group in Chicago. I'm Corbett Lunsford. Tune in next time.